Meet Sarah and Randy. Sarah is a newly arrived immigrant to the United States, and Randy is a middle manager at Corporate Co. The two met 6 months ago on Tinder and have been together ever since. Their future looks bright, except for one thing: bad credit. To put it bluntly, Randy has horrible credit, mostly due to a previous bankruptcy. Sarah isn't much better. As a newly minted permanent resident, she has no credit history to speak of. Both of them would like to improve their credit, but have no idea where to start. What should they do? Well, luckily for Sarah and Randy, there's actually a product called a secured credit card designed specifically for people in their situation. However, if Sarah and Randy don't have a firm understanding of what a credit card or credit score is, or how to effectively use either, we highly recommend watching our 3 videos: Credit Cards 101, Credit Scores and Reports 101, and Credit Cards, Mistakes and Best Practices before continuing further. But let's get back to the matter at hand. What are secured credit cards? Simply put, they are credit cards designed for people with minimal income and no or low credit scores, generally below 600. Normally, banks consider these people very risky and aren't willing to give them a credit card. However, in the case of secured credit cards, they're actually willing to make an exception, simply because they require applicants to deposit cash with them. This cash then serves as the basis of the card's credit line. For example, if you deposit $200 with your bank, your credit card will then be given a $200 credit line. Not only that, if you then max out your card and fail to repay, the bank can then take that money as collateral. This little quirk, plus high interest rates, can make secured credit cards seem unattractive. However, they do have one undeniable benefit. Any transaction done with one is reported to the 3 credit bureaus. That means if Sarah and Randy responsibly use their secured credit cards, the bureaus will eventually bump up their credit score. Pretty great, right? So what's the best way to responsibly use a secured credit card? Well, it turns out almost never using it. Randy and Sarah should continue to use their debit cards for almost all their purchases. In fact, they should only ever use their secured credit card for one small purchase a month, like a gallon of milk, and always completely pay off that balance on time. This regimen will minimize the amount of credit used while maximizing on-time payments, both of which, over time, will lead to a very healthy credit score. In fact, within a year or two of responsibly using a secured credit card, Sarah and Randy should have credit scores at least above 640. At this point, they'll be eligible for great unsecured credit cards and loans. Hopefully you, Sarah, and Randy now better understand how to rebuild your credit. Be sure to watch our next video, which covers how to get out of credit card debt